Welcome to Celebrity Investing, your go-to source for insights, tips, and updates on navigating the exciting landscape of personal and global finance. Please like, share, and subscribe for more exclusive content. This is part 1 of Investing in Mortgage-Backed Securities, a complete guide. Investing in mortgage-backed securities, MBS, can be both rewarding and complex. Have you ever wondered how these investments work and why they're essential? MBS are bundles of home loans sold to investors. They offer unique opportunities for those looking to diversify their portfolios. In this video, we'll explore the basics of mortgage-backed securities, their benefits, and what you need to consider before investing. If you're curious about how MBS can fit into your investment strategy, keep reading. By the end, you'll have a clearer picture of whether this type of investment is right for you. What are mortgage-backed securities? Mortgage-backed securities, MBS, can seem complicated at first, but they're easier to understand once you break them down. Think of them as a way for investors to put money into the housing market without buying property directly. Here's what you need to know about MBS. Definition and basics. Mortgage-backed securities are like big bundles of home loans. When you buy a house with a mortgage, the bank might sell your loan to another company. This company pools your mortgage with others to create a security. They then sell the security to investors. These securities work because of how mortgages are paid off. Homeowners make their monthly payments, which include both principal and interest. This money is passed to the investors who own the MBS. So, if you invest in MBS, you're earning from all those monthly mortgage payments, kind of like how you earn interest on a savings account, but with a little more risk and potential for higher returns. Types of mortgage-backed securities. There are a few different types of mortgage-backed securities. Knowing the differences can help you decide which ones might be right for you. Agency MBS. These are backed by government-sponsored entities like Fannie Mae, Freddie Mac, and Ginnie Mae. Because they have this backing, they're considered safer but typically offer lower returns. They're like a reliable car that won't break down easily. Non-agency MBS. These are not backed by the government. They're issued by private companies. Without the government guarantee, they come with more risk but can offer higher returns. Think of these like a sports car, more exciting but with a bit more risk involved. When you invest in mortgage-backed securities, you're putting your money into the housing market without ever having to buy or manage property. It's a way to diversify your investments and earn money from the steady flow of mortgage payments. Whether you go for the safer agency MBS or the riskier non-agency MBS depends on how comfortable you are with risk. How mortgage-backed securities work. Mortgage-backed securities, MBS, can seem complex, but they play a huge role in finance. Let's break it down and see how they work. The process of securitization. The journey of a mortgage turning into an MBS is called securitization. It involves several steps. Mortgage origination. This is where it all starts. Banks or mortgage lenders give out loans to people looking to buy homes. These loans are the base of MBS. Pooling the mortgages. Instead of holding onto these loans, the lenders group, or pool, them together. These pools can contain thousands of individual mortgages. Creation of MBS. Once pooled, these mortgages are sold to a government-sponsored entity like Fannie Mae or a financial institution. They then create securities backed by this pool of mortgages. Rating the MBS. Before selling, these securities get rated by credit rating agencies. The rating reflects the risk level. Selling the MBS. Finally, these securities are sold to investors. The investors could be individuals, pension funds, or even other financial institutions. Think of this process like a bakery. The baker, lender, takes different ingredients, mortgages, combines them into a dough, pool, bakes it into bread, MBS, and sells the bread, securities, to customers, investors. Cash flow structure. Now, how do investors get their money back? Monthly mortgage payments. Homeowners make monthly payments on their mortgages. These payments include both principal and interest. Collection of payments. The entity holding the pool collects these payments. Distribution to investors. The collected payments are then distributed among the MBS investors. Usually, these payments are divided into interest payments. This is the income investors get from their investment. Principal payments. This is part of the original loan amount being paid back. Imagine it like a pie. Homeowners bake small pies, monthly payments, and send them to the bakery entity. The bakery cuts these pies and serves slices, payments, to the investors. By understanding these steps, it becomes clearer how MBS function in the financial system. They transform individual mortgage loans into tradable securities, spreading out risk and providing investors with regular income. Benefits of investing in mortgage-backed securities. Investing in mortgage-backed securities, MBS, can be highly beneficial for those looking to balance their portfolios. Let's explore some of the key advantages in more detail. Regular income stream. One of the primary benefits of MBS is the predictable income they offer. When you invest in MBS, you're essentially buying a piece of a large pool of mortgages. Homeowners make regular mortgage payments, usually monthly, and these payments are then passed on to investors like you. Think of it as a steady paycheck. Consistency. Since mortgage payments are generally made on a regular schedule, you can count on a consistent stream of income. Predictability. This regular income can be especially appealing if you're looking for a reliable way to generate cash flow. It's much like having a rental property, but without the hassle of being a landlord. The ability to receive dependable income sets MBS apart from many other investments that may be more volatile or unpredictable. Diversification benefits. Diversification is a key principle in smart investing. It's like not putting all your eggs in one basket. MBS can help diversify your investment portfolio in a few significant ways. Reduced risk. By adding MBS to your portfolio, you spread your investment risk across a wide range of borrowers and properties. Different asset class. MBS belong to a different asset class compared to stocks and traditional bonds. This means they often respond differently to economic changes. When stocks are down, MBS might remain stable or even increase in value. Inflation hedge. Because mortgage payments can sometimes adjust with inflation, MBS can offer a degree of protection against inflation. This is particularly valuable in times when the purchasing power of money is decreasing. Incorporating MBS into your investment strategy can provide balance and reduce risk, offering a smoother ride even when the market is rocky. Investing in mortgage-backed securities offers unique advantages that can make them a worthwhile addition to any diversified investment portfolio. Risks associated with mortgage-backed securities. Investing in mortgage-backed securities, MBS, can be profitable, but it also comes with risks that investors should understand. Here, we break down some of the main risks you need to be aware of. Credit risk. Credit risk is the danger that borrowers may not repay their mortgages. When a borrower defaults, it can hurt the value of the MBS. Think about it like lending money to a friend who promises to pay you back with interest. If your friend can't pay you back, you're left with nothing. MBS are similar. When many borrowers default, the expected returns drop, making the investment risky. To manage this, investors often look at the credit ratings of the MBS. Higher ratings usually mean less risk, but they aren't foolproof. Stay tuned and continue to watch our videos to gain valuable insights into the world of finance. Subscribe, like, and share to continue your journey to financial success.